Funding for Market Journal is provided by the Nebraska Soybean Board.
A diesel-powered engine on a farm works hard and operates in a grueling environment. Soy biodiesel fuels stand up to the challenge of powering farm equipment, but are also renewable and environmentally responsible as well. The Nebraska Soybean Board is committed to encouraging the use of soy biodiesel to protect the environment and sustain Nebraska's agriculture. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Ron Plain analyzes the hog markets. We show you why a sugarcane farm in Louisiana uses soybeans in its operation. Brad Luman examines enrollment in farm programs. And Dennis Conley looks at the current state of the ethanol industry in Nebraska. University of Missouri Extension Ag economist Ron Plain is our marketing analyst this week. We talked with Ron Tuesday afternoon about the demand for pork, the effect of corn prices on break-even margins, and the seasonality of prices in the hog market.
Well, Jeff, there's a pretty consistent pattern in both production and prices. This time of year, we should be getting close to the start of a seasonal rally. Hog prices normally peak sometime around June and decline as you move after that. So a few more weeks with some fairly stable prices, then look for a seasonal upward trend and push hog prices up another $10, maybe $15 a hundredweight by the middle of June.
Where are margins now, and where could that push them to? And assuming that corn price doesn't run away or completely flop.
Yeah, well, margins aren't very good now. We've lost money for about 6 months in a row in the hog business. It's due in part to low hog prices and also due to very high feed costs, corn at $7 and at times higher. We're probably not going to see much improvement in corn price, at least much decline in feed costs until we get close to harvest this summer, so you can kind of live with that. Hog prices, though, should rally. We've had those summer contracts at times close to $100 on a carcass weight basis, and if we can get that again, we'll have some good profits this summer, we think.
Contrast for me the losses that are being seen in the pork industry versus what's being seen in the beef industry.
Yes, last year the average hog producer lost about $12 per hog, so it was a tough year. In the cattle business, cow-calf producers by and large had a fairly good year. Feeder cattle prices were record high last year. Margins got real tough in the feedlots, though, because we ended up with some very high-priced corn. And so for those cattlemen who were buying corn, 2012 was a tough year. If you could get by with grass, if you had enough rainfall, it was, for most cattlemen, a fairly good year profit-wise.
For both those sides, both hog and beef, what do you see for corn prices, as in any recommendations for buying?
Well, I've been recommending sort of hand to mouth for the time being. We should get back to more normal weather and better yields and a sharp drop. We could easily take $1.50, maybe a bit more off of corn prices this fall compared to where we are today.
Quantify the demand for me for pork now, and then what you think it might look like as we go into summer and prices start to tighten up when supplies do.
Well, pork demand usually picks up a bit when you get into grilling season. Pork chops and pork steak do well in summertime when grilling is popular. Also, bacon prices are normally the highest in late summer when we hit BLT season. Bacon's been doing well for several years now, and hopefully we're looking for a strong demand situation again this summer.
There's good news in the pork industry on the export front. They set a record in 2012. Tell me about what that means and what it could mean going forward.
Yes, absolutely. Second consecutive record year for pork exports. We're exporting somewhere 23% of all the pork we produce in the United States. So it's a very important market, and a lot of what we export is high dollar cuts of pork. A lot of tenderloin and pork loins go into Japan. So it's very important to the hog industry that we do well. On the other side of it, imports were down. 2012 pork imports were the lowest since 1998.
Do you have any potential hurdles on the horizon in that export market, Ron? Or do you think it can continue to be strong?
Well, we're doing real well recently in shipments to both Canada and Mexico, two big markets. The big concern right now is Russia. They put new restrictions on imports of meat from animals that are fed ractopamine. So we've seen a sharp drop-off in pork movement to Russia. But hopefully we'll continue to do well on shipments to South Korea and Japan. So right now I'm looking for total pork exports here in 2013 to be very close to that record we set last year.
I'm putting you on the spot here, but with Russia, how big are they when it comes to pork and beef, as in does it have an immediate impact that's felt?
Well, it matters. Some of the weakness in pork cutout value has been due to Russia buying less, but they're like our fifth or sixth largest foreign market for pork, and probably somewhere around fourth or fifth on beef shipments. They also tend to buy lower valued cuts. So yes, it hurts, but it's not near as important to us as, say, the Canadian or the Japanese market.
Right. The USDA also this week announced their 10-year forecast for a few things, and when they looked at the meat trade, they saw the growth in chicken growing faster than pork and beef. Is that at all a concerning trend to you?
Well, that's the trend. If you look back through most of the 80s, 90s, and first decade in this century, chicken production grew much faster than the other meats, and so it's reasonable that they would forecast that. But there are indications that chicken may not quite do as well going forward. Domestic demand has been a bit softer, and the key cut, chicken breasts, have not done particularly well in the markets, at least didn't last year.
All right, give me your outlook here for prices going forward, if there's any opportunity to lock anything in on the futures market.
Well, there was until a few weeks ago. We've had a drop-off in cutout value and some weakness in hog futures. I'm not recommending any hedging at this point. I expect hog prices will make it into the upper 90s this summer, get close to $1 a pound on a carcass weight basis. That's above current summer futures. Again, seasonally, we should see prices really start to pick up sometime around the 1st of April or so, and then a strong push up during May.
Ron Plain, our guest, University of Missouri. Ron, thanks for the time.
Always good to talk with you, Jeff.
Next week, Elaine Cubb, the author of Mastering the Grain Markets, will join us to look at corn and soybean markets. The Nebraska LEAD program is currently accepting applications for LEAD Class 33. Members of LEAD commit approximately 60 days over 19 months, including trips to Kansas City, Washington, Chicago, and an international study travel seminar. LEAD Program Director Terry Hejny explains how participants can benefit from LEAD.
Confidence. That's the first thing, confidence in being able to express their point of view. They also learn how to listen to others' points of view. And, they really work hard on learning those skills about compromise, understanding all sides of the issue, listening, public speaking and communications, written communications, verbal communications. That's what they come through the program with. They also gain a network of supporters out there, of colleagues, of experts that they can rely on to find the answers and find out really what's going on in the world of agriculture and education and healthcare, in government. And so they really come out of the program with the tools to be fast-tracked into leadership positions.
LEAD Class 33 applications are due by June 15th. For more information, you can visit lead.unl.edu. The 2013 Beef Feedlot Roundtables are next week at 3 locations in Nebraska. UNL Extension says feedlot managers, owners, employees, and others in the industry will learn the latest in feedlot health, nutrition, environment, and economics. The sessions will be held Tuesday, February 19th at the Gehring Civic Center. February 20th at the Phelps County Extension Building in Holdridge, and February 21st at the Nielsen Center in West Point. Pre-registration is $30. Registration at the door is $40. You can contact Matt Luby at the Panhandle Research and Extension Center to register or to find more information. Over the last 2 weeks, Market Journal has brought you coverage from our trip to New Orleans as part of the Nebraska Soybean Board's See for Yourself program. One of the stops during our stay included a sugarcane farm, which now incorporates soybeans into its crop rotations. Kurtis Harms has more.
Nearly 70 miles west of New Orleans, near the community of Labadaville, Louisiana, a group of Nebraska soybean producers toured E.G. Robichaux Farms. Sugarcane is the primary crop grown in this operation, with more than 6,000 acres of the crop. The crop takes a year to mature after planting and will result in 3 separate harvests. 1,000 to 1,200 acres of soybeans are then added into the rotation.
When we plow out a field that has been harvested for the last time, we'll plant the beans in late April, and those beans come off in, say, August, and then we plant cane right behind it. That won't be ready for the cane won't be ready until the following year.
The sugarcane soybean rotation is fairly new for Robichaux Farms. This spring will mark the 6th year soybeans are planted following the sugarcane harvest. Advancements in crop technology allowed for the implementation of soybeans.
When they came out with Roundup Ready beans, it really made it a better fix for us, and our crop consultants started to kind of ease it on us, and we've been doing it and been pretty successful with it so far.
Since Robichaux Farms implemented the sugarcane soybean rotation, all of the beans planted have been harvested. This helps with the overall profitability of the farm. The soybeans also improve soil health.
You know, if we can make a crop and harvest a crop and have a profit, it'll offset some of our other costs for the sugarcane side of the business, and it adds to our soil tilth. It makes it better for the cane. It has a little residual nitrogen, which is always helpful, beneficial. So it's basically why we got into it.
Like many farmers in Nebraska, the Robichaux's biggest complaint is a lack of sufficient moisture. In 2012, the area received around 50 inches of rain, where the average is just over 60 inches a year. Through the tour, the Nebraska farmers were able to gain insight on different types of ag operations in alternative growing environments.
Well, for one, I thought it would be interesting just to kind of get out of my element and see how things are done in another part of the country. Louisiana, of course, has way more challenges with weather or insects or diseases than what we have in Nebraska. I don't want to say we're lucky to have a winter time up there, but it does eradicate some of the problems that you might face down here. And I just wanted to talk to farmers like we are now and just get their scope on what it means to farm in an area like this.
Reporting for Market Journal, I'm Kurtis Harms.
To see all of our coverage from New Orleans, visit our website at marketjournal.unl.edu and click on the previous programs link. As you heard last week, acre and direct and counter-cyclical programs were extended this year as part of the 2008 Farm Bill. Sign-up begins Tuesday and ends August 2nd. Our discussion with Brad Lubin Thursday showed there might be a winner between the now familiar programs.
Well, it's interesting. We've had this acre versus DCP decision before in the 2008 Farm Bill, first enacted in 2009. At the time, acre looked like it provided a much stronger safety net tied to revenue that looked more relevant here than the old price net. And acre participation was higher in Nebraska than any other major program state. Still pretty small by comparison, 20–25% of the acreage and producers across the state. So attractive but limited. We expected that decision to be gone. We expected a new farm bill in place, and obviously Congress did not get that done, but they did pass a one-year farm bill. We also expected direct payments to be gone as part of a new farm bill debate, and instead, in the one-year renewal, the one-year reauthorization, we actually have a new direct and counter-cyclical program versus acre program decision.
Historically, acre hasn't really paid off, right? Do you see that it will this year?
Well, it's interesting. Acre has not paid major payments to Nebraska producers, but it did provide a stronger safety net relative to current price and yield expectations. Now, however, it's a 2013 decision for 2013 alone. We know the price-based safety net in DCP is still far, far out of the money. Well, the acre revenue safety net is also substantially below current revenue projections for 13. If you take current 13 price expectations and trend yield expectations, you have revenue too far above even the acre guarantee to look like it triggers. So what's that left to? It's the direct payment portion of the program. And under DCP, you have a full direct payment. Under the acre, you have a 20% penalty, so 80% of the direct payment. That says producers get to sign up here starting next week. The most likely sign-up scenario is to sign up for DCP at this time.
The one problem with that, or the one issue to that, is that with fiscal cliff discussions that will be ongoing throughout this month and into March, direct payments are on the table for cutting. So what happens if you sign up for that program?
Well, it's an interesting question. Sign-up starts now. Payments aren't due under direct payments, for example, until October. Could Congress actually cut those payments before they're made, even after a contract is signed? Well, the contract language does essentially say that this program is subject to statutory changes. If there's budget sequestration, it sure looks like it would make across-the-board cuts that we have seen before. If there is any sort of budget sequestration deal that includes payment cuts, well, farm program payments are on the chopping block. Now, my personal read on this is it's awful difficult after a program is began implementation to rescind the payments due under that program. Across the board, cuts could happen. Actually taking direct payments and leaving the rest of it in place looks somewhat challenging unless it's part of a big farm bill deal and not just a piece-by-piece deal.
Well, I'm sure you'll be talking more about this at your upcoming Cornhusker Economics Outlook meetings across the state. Eight locations, 4 days. You're going to be exhausted. Look forward to that. Where are they?
Well, it's an interesting focus. We've got a very concise 2.5-hour agenda on crop outlook, livestock outlook, policy outlook. And with that agenda, we can also get across more locations. We're going to start on Monday, February 25th in Falls City in Geneva. Tuesday the 26th, we'll start in Kearney and move on to Kurtis. Wednesday the 27th, we're all the way out to the Panhandle in Scottsbluff and return east towards Whitman and the Gunmanson Sandhills Laboratory.
You got a lot of sightseeing, yeah.
Yeah, a lot of sightseeing on the way. Finally, Thursday the 28th, we're in Norfolk and finish that evening in Lincoln.
The event is free, sponsored by the Nebraska Corn Board and Great Western Bank. Where can you go for more information? Do you need to register?
Right. This is, thanks to the sponsorship of both the Corn Board and Great Western Bank, this program is being offered at no cost to participants. But pre-registration is encouraged to allow for local planning purposes in terms of refreshments and meeting room logistics. You can visit the local extension office, contact them for more information. You can also visit our website, agecon.unl.edu. That'll point you to our department's website where you'll find a reference to the conference series.
If you missed our discussion on the acre program and direct or counter-cyclical payments with Dan Steinkruger from Nebraska State FSA, you can find it archived in the February 8th episode of Market Journal on our website. Aaron Nelson's crop consulting business near Meade includes an implement he pulls through the field to capture 3 soil properties on the go. His use of a Veris machine is explained in the February Nebraska Farmer. Sensors on the rig provide maps for soil texture, soil organic matter, and soil pH. Nelson says the more data points you can get on the go, the better soil information you can have. You can read more about his business and his machine in February's Nebraska Farmer. The state of Nebraska has 24 ethanol plants, which combine to produce about 2 billion gallons of ethanol a year. In order to do so, they require more than 700 million bushels of grain. As a state, Nebraska ranks second in production to Iowa, which can produce over 3.5 million gallons of ethanol per year. But high corn prices are narrowing margins for the industry overall. We recently examined the status of Nebraska's ethanol plants with Dennis Conley and asked if there's reason to be concerned with the latest shutdowns.
Jeff, I don't think so. I mean, we're seeing normal seasonal patterns going on here, and we're seeing a little bit of a margin squeeze, but the numbers are that in Nebraska we have recently 7 out of 24 of the ethanol plants are shut down. Nationwide, the number is 36 out of 211.
You said there's a pattern. What do you mean by that?
Well, there's a seasonal pattern to these kinds of plants. Like in the petroleum industry, for example, refineries will shut down this time of year in order to do maintenance and upgrades and to get ready for the peak season in the summer. So the same thing happens with ethanol plants. They have to do some maintenance. The demand for gasoline at this time of the year in the U.S. is at its lowest level. I think people intuitively understand that the summer driving season, June, July, is when it's at its peak. This is when it's at its lowest. So the demand on these ethanol plants for the ethanol to go into the gasoline blend is at its lowest.
there's almost a rush on popular opinion, though. If one closes down, you wonder if there's going to be a rash of more, though, right?
That's right,
Yeah.
yes.
We had talked in October about how much impact DDGs had for ethanol plants across Nebraska, how much money they were making there, and that was kind of offsetting some of the cost of ethanol. As you go back and look at some of the past years and now into 2012 and 2013, describe to me how important DDGs are.
We're finding DDGs are increasingly important. You're right, when we go back 4 or 5 or 6 years, the DDGs were a byproduct that they were trying to get rid of at whatever price they could. Ethanol was the main co-product that came out of this. But recently, with the growth in the export market for DDGs and the adoption of DDGs for feeding livestock in the U.S., it is now becoming what we would call a co-product. Its value is somewhat equivalent to that of the ethanol. In some cases, when we look at the price of DDGs, it used to trade at a discount to corn, say 80% the price of corn. Now it's trading at the corn price or even a premium like 120%. So it's moved up in the rank of importance for an ethanol plant.
What about cost? Tell me about the cost and the history of cost over the last few months and few years.
Yes. If we look at the variable costs for running an ethanol plant, and what we have here on this diagram is a proxy for what it would cost an ethanol plant. This is a 100 million gallon a year ethanol plant. That we see when we lay that on the gross margins, we still, I mean, the ethanol is still negative, but the distiller's grains still has somewhat of a positive net margin to go with it.
Your variable cost, is that a large part of that going to be your corn price?
Yes, corn price and you know, other costs of inputs like that. And then you have the fixed cost. And when we lay the fixed cost on there, that changes things quite a bit. Now, each ethanol plant has its own cost structure. You know, some have more fixed costs than others, but as a proxy, what we're showing here is that after we put that fixed cost on it, we see just a very small net margin coming from the distiller's grains, maybe about 10 cents a gallon through the 2012 year.
Yeah, we're looking through August. Do you expect the last 3 months of the year to be about the same as, or last 4 months of the year to be about the same as what we saw previously?
I would expect it to be about the same. You know, we still have the higher prices for corn, you know, $7 a bushel. The seasonal demand for the gasoline is going down. So like we said, these plants aren't having to deliver the ethanol so much. So my guess is it's staying pretty much the same. Could
we see that mirror the same image in 2013 here until we at least get to planting and maybe see what corn acres are going to be, and bearing in mind that gas prices are forecasted to be down overall from what they were last year? Yes, no, exactly right. I mean, it hinges on, you know, what's going to happen with corn production in 2013. What's the acres planted? What's the yield? Is the moisture going to be there? All of those things. Are we going to have an adequate supply? Or are we going to have another short supply? How will that affect the price of corn? Will it stay up around $7 or $8, or will it move back down to maybe 5 or 6? That all impacts the ethanol plant. And the other thing is the gasoline supply itself is in the long run is declining, and so the demand for ethanol to go in as a blend is going with that as well. And now with his weekly weather forecast, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we are again for the weekly forecast. Before we get to the main forecast, let's take a little bit of a look at what happened during this last 7-day period. And of course, the big news was the storm system that came out last weekend did fall a little bit farther north with the heavier precipitation than initially forecasted, but we did see a fairly decent snowfall event across the northern half of the Sandhills, particularly the northwestern half of the Sandhills. And as you move south and east of there, the precipitation total dropped off rather dramatically to the point where eastern Nebraska received just a few hundredths of an inch of moisture in most locations. We caught into the dry slot. Now, this snowfall wasn't a drought buster by any means, but it was an effective precipitation producer, and it does give us a semblance of hope that as we go through the next few weeks with the number of storm systems that look like they may be moving through the Central Plains, that we can continue to build on the moisture that has already fallen, and perhaps may give us a semblance of hope as we move into the spring that we could possibly get enough moisture that we can generate some decent grass growth on our very drought-stricken pastures out in western Nebraska. So let's take a look at the upper air models and see what we can expect as we go through this next 7-day period. And as we go to the upper air models, the first thing I'll draw your attention to is that here is a trough across the eastern United States that's been responsible for some significant moisture across the southeast. And according to reports, anywhere from 2 inches up to 12 inches of moisture fallen in this region. And this is an area where we do still have some drought signature, and that does go all the way down into the Florida Panhandle. This was a system that come across Oklahoma and then really erupted as it got to the southeast during the middle week period. And it's expected to move up the eastern seaboard and out to sea as we go through the weekend, but we'll turn our attention to the west as we have a trough in the Pacific Northwest that is probably going to move into our region as we get into the Monday time frame. But in advance of that, we're going to start to see some warmer air build into the region, and a fairly nice day as we get through today. Most locations are going to be very warm, very sunny, and much warmer conditions will be in store as we get into tomorrow, as that probably looks to be the warmest day of this 7-day period. And wouldn't be surprised that we'll see some temperatures nearing the upper 50s across portions of southern Nebraska. But then we have this little trough that's going to move into our region rather quickly, and by the time we get to Monday, we'll notice that trough quickly makes its way to the east, kind of splits the energy a little bit. So we're not expecting much in the way of moisture, maybe a few flurries. And outside of that, as it moves to the east, it's going to draw a little bit more Gulf moisture up into the eastern Corn Belt and should be an efficient precipitation producer for them as it moves up in the upper Great Lakes. But then we turn our attention to the southwest. This is a system that we need to really pay attention to. Right now, the models are indicating a path that will take it directly to the south of Nebraska and generate a fairly widespread precipitation event, particularly as we get into the day on late Wednesday and Thursday. Here comes that system. It's going to be digging deep. It's going to be pulling a lot of moisture into our region. And then as we get into Thursday, it sits right over to the eastern Nebraska or eastern Iowa and really wraps a lot of cold air around it, and we should see an efficient snow producer. And by the time we get to Friday, it's going to move out of our region. So if we look in terms of the temperature forecast, what we're going to notice is temperatures are going to be fairly warm this week, and then we'll see a cooling trend with very heavy snow possible on Thursday, and then we'll see a clearing conditions on Friday. If we get to the 6 to 10 day forecast for next week, the following Tuesday, we'll see that the cold air remains in place to the west, and yet another system is expected to move out as we get into the midweek period that might give us another chance of precipitation.
Thanks, Al. Our interviews with Ron Plain, Brad Lubin, Dennis Conley, and our coverage from Louisiana are all archived on the Market Journal website and YouTube page. Next week, Jeff Peterson and Elaine Cubb will cover the grain markets. Daryl Martin will discuss deficit irrigation, and Keith Lewin will explain the benefits of the Nebraska On-Farm Research Network. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
Soybeans are found on dinner tables around the world. Some form of the soybean is found in baby foods, snacks, cooking oils, and many other food items eaten daily. And soybeans provide the protein in the diets for livestock and fish. The Nebraska soybean farmers support research to develop new soy-based products for foods, livestock, and industrial uses through their checkoff dollars. The Nebraska Soybean Checkoff, growing opportunity from the ground up.